Avalanche has been holding its ground around $12 lately, even as the broader market feels heavy. Yet underneath the surface, the network's showing signs of real, sustained strength that could set up a meaningful move if sentiment turns. There's also been some big news in the last few days, which we'll get into. AVAX powers one of the fastest, most scalable Layer 1 blockchains out there. Launched in 2020 by a Cornell team led by Emin Gün Sirer, it handles thousands of transactions per second with near-instant finality thanks to its unique Avalanche consensus. The real edge comes from subnets, custom blockchains, which developers can spin up for specific needs like gaming, finance, or tokenized assets, while keeping everything interoperable. AVAX itself, with a max supply of 720 million, gets used for staking rewards, paying fees, many of which get burned, and governance. Right now, it's trading near $12.20, market cap hovering just over $5 billion, with circulating supply around 430 million tokens. Network metrics are telling a strong story. Daily active addresses recently spiked to a record 1.71 million on the C chain, way above the typical 300,000 to 600,000 range we've seen. Transactions are averaging millions weekly, with total historical count climbing fast, over 1.45 billion in recent periods. Fees burned continue reducing supply, and throughput stays high at over 4,500 TPS possible with sub-second settlements. Stablecoins on the chain are growing too, up noticeably year over year, feeding DeFi and real-world use cases. The institutional side is heating up in a big way. Galaxy Digital just closed their first tokenized collateralized loan obligation. A $75 million deal settled on Avalanche, with a $50 million anchor from Grove to fund consumer lending through Arch. Its structured credit brought on-chain, faster, more transparent, scalable up to 200 million as loans originate. This builds on Avalanche's push into real-world assets, where billions are already tokenized, and it shows big players using the chain for private credit and structured finance. Beyond that, other catalysts are lining up. Check out OKX through the link below to trade Avalanche and a ton of other coins on one of the highest-ranking exchanges worldwide, and grab some great perks, including €100 just for getting started, and up to 200 for inviting your friends. Wyoming launched its state-backed stablecoin FRNT on Avalanche for public sector settlements. Malexi rolled out a $240 million agricultural asset tokenization exchange. BlackRock's Biddle Fund has added hundreds of millions in RWAs here. ETF filings from Van Eck, Bitwise, and Grayscale are in play, some with staking rewards included, potentially hitting approvals in early 2026. Avalanche also kicked off a $1 million Build Games global competition to spur on-chain innovation, especially in gaming and experimental products. Upgrades like Avalanche 9000 have slashed C-chain costs dramatically, drawing more builders to subnets. BlackRock's Biddle Fund is a fully tokenized money market product that invests in things like U.S. Treasuries for stable, yield-bearing exposure. Through Securitize, which handles the tokenization, Biddle gives institutional investors blockchain-native access to high-quality liquidity with the backing of one of the world's largest asset managers managing over $10 trillion. Avalanche was integrated into Biddle at the end of 2024. Since then, it's grown significantly. We've seen hundreds of millions flow in, with reports of around $500 million tokenized into Biddle specifically on Avalanche, pushing the network up in real-world asset TVL rankings. Right now, Biddle holds strong positions across multiple chains. But Avalanche has become a major one, often ranking second or fourth depending on the snapshot, with allocations jumping dramatically as institutions seek faster, lower-cost settlement and transparency for these treasury-like assets. As for Malexi, they're bringing something really niche, but potentially massive to Avalanche with their agricultural asset tokenization push. This Abu Dhabi-based fintech startup out of the Hub 71 ecosystem just announced and is launching Matex, the world's first agricultural asset token exchange, built directly on Avalanche. The idea is to tokenize real-world agricultural commodities like crops or goods in storage, turning them into Malexi agri-tokens or MATs. These are backed by insured, audited, traceable assets sitting in verified warehouses or in transit. With built-in risk management from Malexi's patented IoT, AI, and blockchain tech, it solves huge pain points in global food trade. Slow cross-border settlements, lack of trust, high risks from spoilage or fraud. On Avalanche, Maytex enables instant ownership transfers, immediate payments, even internationally, and full transparency through on-chain records. Every token carries embedded assurance, proof of ownership, insurance, quality checks, so buyers and suppliers can trade securely without the usual intermediaries dragging things out. Announced in early 2026, this is still rolling out, but it's a prime example of how Avalanche's speed, low fees, and RWA focus are attracting specialized real-world use cases. If it scales, it could open up billions in agri-trade to blockchain, de-risking supply chains and making financing easier for farmers and traders worldwide. All this points to utility-driven growth rather than pure hype. Short-term AVAX needs to break resistance around $13 to $14, and if broader crypto sentiment improves, maybe with ETF news or macro tailwinds, AVAX could realistically test $15 to $18. Recent whale accumulation defending $12 support is a good sign. And like with many solid projects, it seems AVAX is just waiting for its moment. If RWAs and institutional inflows really accelerate, say more tokenized credit deals or ETF green lights, we could see $20 to $30 by mid to late 2026, especially as subnets scale and burn pressure builds from higher activity. But let's stay realistic. There are clear risks. If the market stays bearish or Bitcoin dumps hard, AVAX could retest $10 or lower, especially with any token unlocks adding supply pressure, like the recent $9.57 million event. Regulatory delays on those ETF filings would hurt momentum. Competition is fierce. Solana's Speed, Ethereum L2s, or newer chains could pull liquidity away if Avalanche's subnets don't gain traction fast enough. Watch for declining active addresses or transaction volume as a warning that user growth is stalling, or if burn rates slow significantly. Avalanche isn't flashy right now, and that's not kind of the point. While most of the market is chasing noise, AVAX has institutions actually building on it. Real-world assets, credit products, infrastructure that doesn't disappear in 6 months. That stuff isn't exciting until it suddenly is. If the right catalysts line up, patient holders are usually the ones who get paid. Just don't confuse silence for stagnation. Keep an eye on what's happening with subnets and any ETF developments. Those are the kinds of moves that tend to flip sentiment fast.